This is Jim Trippon, Editor-in-Chief of China Stock Digest with my China market commentary for March 31st, 2009. This week's commentary is how not to get burned in China's solar stock rally. A number of my China Stock Digest subscribers were electrified by the sudden boom in China's solar energy stocks late last week. Badly depressed stocks such as Suntech Power, First Solar, and Yingli Green Energy jumped overnight by as much as 50%. What happened? Well, some stock analysts clearly overreacted to a report from the Chinese Finance Ministry's website that indicated the Chinese government would offer a sizable subsidy for the cost of installing solar panels. That's about all the detail that was provided on their website. Certainly it was not enough to justify a double-digit gain in nearly every Chinese solar stock that was even remotely related to the industry. Buying into this overnight sensation almost guarantees investor losses unless substantially more satisfactory detail is later revealed by Beijing. Some of the details that are missing in the subsidy plan include things like what are the conditions to qualify for this payment and exactly what kind of installation would be included in the plan. Also missing is what will be the timing of this government payment and exactly how many years this program will last. Investors simply can't afford to jump into stocks without knowing what companies are going to benefit from it and getting a lot more detail on how this program is going to work. Here's what we do know so far. We know the Chinese government has announced a 20 yuan per watt, that's about $2.93 per watt, subsidy for solar energy. But only about 2.5 billion yuan have been allocated for this program, and that amounts to a relatively underwhelming $366 million. An amount that, although it might provide a one-time boost for the industry, certainly will not have a major impact on the industry long-term. The size of this subsidy implies that the government's only going to support about 180 megawatts of installations, and that's not really significant for the Chinese solar industry. In fact, in order to gauge the importance of subsidy from an investment perspective, it's important to compare the size of the program to the size of the industry. There are a lot of Chinese solar panel makers, and there's approximately a dozen of them that produce a lot more annual solar products than is allowed for this entire solar subsidy plan. For instance, Trina Solar shipped about 201 megawatts of products in 2008, and Yingli Green Energy shipped 281 megawatts last year. An industry-wide boost of only 180 megawatts is relatively small by comparison. Our view is the market's overreacted to this plan, and even shares of Arizona-based companies like First Solar jumped about 13% on the news of the China stimulus plan. But First Solar, an Arizona-based company, is highly likely to get any benefit from a plan that's been targeted strictly to help Chinese-based firms. It's also worth noting that First Solar produces about 1 billion watts of solar energy products annually, and even if the Chinese subsidy applied entirely to First Solar, it would only cover about 15% of their annual output. In short, this sudden boom in solar stocks has all the makings of a mini bubble. And from an industry-wide perspective, solar companies both in China and in the Western Hemisphere are facing really serious pricing pressure, both because of overcapacity and because of falling polysilicon prices. Chinese companies and their North American and European competitors are all facing big slides in prices for solar cells and the panels they produce. Perhaps the U.S. solar incentives will ultimately be more generous and will help stabilize prices and reduce the buildup in inventory throughout the solar panel supply chain. But the reality is that the solar power industry is more expensive than conventionally generated electricity, and the industry is almost entirely dependent on government subsidies to make it an economic alternative. This Chinese subsidy by itself is not enough to revive the industry, and for the time being, we expect solar energy stocks to drift back to their somewhat previously pre-stimulus values. Analysts worldwide have now cast doubt on the Chinese stimulus plan, and without investor confidence, share prices are likely to head only one way, and in our view, that's down. Now, to see what of our China picks in China will not leave you sunburned, check out our China Stock Digest website. We're currently offering a free trial issue that you can sign up for today. So until next time, this is Jim Trippon, Editor-in-Chief of China Stock Digest, staying committed to your profits from China.